please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. I mean, there is some bit of buying which seems to have come about. We're off the lows. I mean, I think that's about what you can say. 10,480 was the low. We're at about 10,495. So some 12 point pullback, I think, is what we're seeing. Okay. Let's bring in Ashwani Gujral, who's with us for a quick check. Ashwani, thanks very much. Your sense of what you're seeing out there on the screen, there's selling which is resumed.
See, the issue is that we've fallen for many days, and basically the market does not have the legs to go down further. Hence, we break 10,500 and immediately bounce back. We probably need to consolidate here and then maybe start a down leg if we have to. I don't think today we are going to break 10,500 decisively. In fact, people who are short are likely to cover and take the market back to 10,540, 550. But for the day, I think IT is now showing strong outperformance, and most of these IT stocks are likely to end up at the highs of the day. So my sense is it's a good time to get into something like Tata Elxsi. That's a buy with a stop of 1185, target of 1220. Titan is a buy with a stop of 910, target of 945. And NIIT Tech is a buy with a stop of 1065, target of 1120. For many days, the IT index was fairly in a tight range. Today, this seems to be breaking out, and if that does happen, then possibly Nifty will get a bit of a stronger upside.
Okay. Ashwani, just wanted your thoughts on a couple of these oil marketing companies and the kind of downside they're seeing today as well.
See, I've been saying for many months that the oil story is over. So now, the bad news is also beginning to come in. The fact remains that they cannot benefit when the oil prices are going up, and sooner or later, if they go up to 90, 100, possibly somebody's got to pay, and the market is getting ready for that. I think HPCL now heading towards 260, similar story with BPCL. These are basically a void type of stocks. All kinds of companies who are commodity consumers are going to get into trouble. We've already seen what happened with the tire space. So now the commodity producers benefit, and commodity consumers like us have a bit of underperformance.
Okay, well, we have a Twitter query for you, Ashwani, now. Bharat has 50 shares of Canfin Homes, which he's bought at 527, wants to know the long-term view, also whether to hold or sell that stock.
As we heard in the morning, yields are going up, rates are going up for the NBFCs. It's a bad time to be a short-term investor in Canfin Home. Longer term, when the rate cycle turns, that remains a question. By the time he could lose more money. So if I were him, I would stay with the consumer type of stocks and at least be safe this year. So maybe buy into a Titan and hold tight. Canfin Home, chances are, can go down further post whatever pullback rally that is there.
Ashwani, thanks very much. Appreciate you joining in with those trades, perspective and advice on questions. We'll take a very quick break here. So 38, 39 points lower on the Nifty, still there, 10,497. Ashwani's basic point was it looks unlikely that the market is going to see another fresh leg down today. Shorts will likely cover, and 10,500 should hold. We come back, we discuss market fundamentals. You are part of Dalton Capital Advisors. He's here in our studios. So that conversation coming right up. Okay, news at the bottom of your screen, and this is essentially after the tragedy over the last 2 days in which a number of people were killed in police firing with protests at Tuticorin, the copper smelting unit of Sterlite Copper, which has been facing protests for the last 100 days, 100+ days now. Madras High Court is now saying is essentially has passed an order banning expansion of the Sterlite copper plant in Tuticorin. Remember what Sterlite Copper wanted to do, and this is a Vedanta company, was essentially double the capacity at Tuticorin, and there was a lot of opposition to this. Activists had been saying that Sterlite Copper had misrepresented where it wanted the unit to be. On paper, what it had said was different from what it wanted, where it wanted the unit to come up on the ground. Of course, there have been other. The basic issue has been health related.
And the fact that they couldn't control environmental damage which was likely to take place or had taken place. And just yesterday was actually the 100th day of the protest, and we had around 30 people who were injured, 9 people who lost their lives because of the kind of protest that took place. 20,000 people had gathered, and apparently the administrators were quite shocked with the amount of protests against this particular expansion plan which was expected to come up, but it's not going down well with Vedanta. In fact, the stock is now at the low point of the day, down 5.5%.
So we sometimes of course, I mean, for the purpose of what impacts the stock, it is expansion and how delayed the expansion can be, etc. So in that very specific sense, I mean, copper smelting is a very, very small percentage of Vedanta's overall consolidated operating numbers, operating profits. I think from memory, and I remember sitting down with Anil Agarwal of Vedanta, I think this was in April. I think from memory of the total consolidated EBITDA copper smelting overall is under 5%. So, it's a pretty small percentage of the overall mining operations of Vedanta. So one has to keep that in mind. It's not very large, but this, of course, will be a setback. The story sort of continues. And of course, this has become political now as well. Like, you must remember, it's not just about,
and the plant, remember, had been fined 100 crores because of environmental damage all the way back in April of 2013. As promised, we have Mr. U.R. Bhatt of Dalton Capital Advisors, who's with us now. Mr. Bhatt, thank you very much for joining in. You've joined at a time when Vedanta is down 5.5%. You've been following the news, which is on ticker as well. What's your sense on this particular piece of news and the metal space as well?
Well, I think metals are generally doing well because the global economy is picking up. But in this particular case, I think there is certainly an issue of pollution which needs to be tackled. I mean, this has got a long history to it, so it's there for quite some time. And I'm sure the local people there are concerned about the health effects of this, and especially the capacity doubling. So I think there's a local movement against that, and that needs to be taken care of. Either you have to do something to bring down pollution, or otherwise win them over.
Fair enough. I mean, stock's down still 5.25%. Mr. Bhatt, what's your view overall on the market, though?
Well, I think it is going to be.
Karnataka will again dominate at least airwaves today.
It will dominate airwaves today. I mean, the biggest anti-BJP front assembling in Bangalore. So, but be that as it may, but that is all done and dusted. I don't think there is any more juice for the market from Karnataka as of now, at least. But otherwise, I think the market is probably range bound with a negative bias, as I have been saying for some time, because largely you have domestic issues are not as serious except for the on the external account. On the domestic front, the economy is, I think, doing reasonably well. Economic activity is quite robust. Even inflation is probably inching its way up, but still within reasonable control. It's just the external account, the rupee, the oil. These are the ones that are a matter of worry. But you don't seem to be having any solution to that immediately, with Trump probably postponing this meeting with the North Korean guy. Then you have the trade problems, you have problems in the Middle East. I think these problems are not going to, you cannot wish them away. I think they will continue to influence flows into India. And as you've seen, they have FIIs have been reasonable sized sellers for quite some time, and more than compensated, or rather just about compensated by domestic flows. I think that is as far as it can. So if the outflows sort of accelerates a bit, I think we will probably be in slightly more deeper trouble as far as the market is concerned.
Is there deeper trouble for the mid-cap index? The kind of underperformance that we've seen as compared to the Nifty, do you think that that will probably increase as we go down the road in 2018?
Yeah, I think so, because I mean, mid-caps probably did not warrant that sort of valuation they were enjoying just a few months ago. And with all these recasting of mutual fund schemes, I think there's quite some adjustments being done and a lot of selling happening on account of that. And you already seen some of those mid-cap specialist PMS sort of managers having some trouble. So I think this is something that will play out, and mid-caps might be under further pressure for some more time till there is some sort of a balance between valuations of large caps and mid caps.
Okay. What about financials in particular? Because there seems to be obviously this dichotomy which is playing out even within the NBFC space. Bajaj Finance, Bajaj Finserv, you can see it in the valuations there. But if you have to focus your portfolio on financials, say adding as well as removing a bit, what would it be like? Well,
a strict no is a PSU bank. A PSU bank, there is
not even SBI.
Lot more time, I think, for us to look into this, because as a matter of fact, if you really see, if you see the gross NPAs, most of these gross NPAs are much more than their total net worth.
Yeah.
So therefore they really don't have capital. So capital inadequacy is sort of endemic there. So something needs to be done about that. I mean, you have done part of the problem in trying to recognize the NPAs, but the second part of the problem is pumping in capital. So that has not been addressed yet. So therefore, that's a big problem for public sector banks. So as I've been saying, that gives a big opportunity for NBFCs and private sector banks. And among them, I think the private sector banks which are sort of corporate focused, they probably are finding some leg up, because most of the problems seem to be addressed. The NCLT issues and all that, they seem to be having been addressed, and then at least the private sector banks are reasonably comfortable on the capital front. So therefore they can continue to grow, and even the NCLT issues, I think probably they have provided very aggressively, and there might be some write backs, as you've seen in some of the cases in the NCLT. So I think we will probably see quite a lot of write backs in respect of the large corporate banks as we go along. So at least the private sector corporate facing banks, there might be some value left there.
Mr. Bhatt, thank you very much for dropping by. Appreciate it as always, and thanks for coming in. We will take a very quick break. We're sort of running behind schedule. I'm being told 34 points on the Nifty, 34 points lower. That is 10,500 back on the table. So not breaking that easily so far. Pharma and PSU banks are doing pretty well. Sun, Cipla, SBI, Bank of Baroda. You're with us here on Trading Hour. The market is down, but it's holding on to that 10,500 mark, as we've been pointing out. L&T Technologies is gaining. It reported a good set of numbers for the fourth quarter. And we have constant currency growth for the company, which came in at about 18.2%. The third consecutive quarter, very strong top-line growth. Keshav Panda is CEO and Managing Director of the company. He's with us here on the show. Mr. Panda, so 7.5% quarter-on-quarter growth, right? I mean, dollar revenue growth?
Yeah, I think quarter-on-quarter 8% actually, 8% growth quarter-on-quarter, and the year-on-year FY17 to 18 we grew 20%. See, there are two things we need to look at it, not just quarter, but FY17 to FY18 we did very well. We closed the quarter at a revenue of 3 million revenue, 62.7 at 62.4 actually revenue, and the growth of almost 66% year-on-year, quarter-on-quarter basis. And year-on-year, FY17 to 18, our growth is 20%. I think it's a strong performance both quarters as well as the year.
Absolutely, Mr. Panda. In terms of guidance, you've provided the street with an estimate of at least 16% organic growth in FY19. What is this at least 16% predicated on, and how much do you think you can probably scale it up to in a best case scenario, based on your current visibility?
I can tell you that I think with the engineering work where you do it, in a lot of technology innovation goes in. And what I'm excited about this time is, not only the number guidance we are given for FY19, if you see our technology, digital and, newest technology revenue is 26% of the revenue. That's a great number to keep in mind. You are going to be relevant in the market provided you have something to differentiate in the market, in the technology market, what you do. So the number what we did, 20% growth year-on-year, 17 to 18. I said visibility right now, I think last year, if you see FY17, I always used to say double-digit growth. Now we are given a number, 16%, at least 16% we are going to do it. And the visibility right now is that number, and we go to the Q1, Q2. I think we keep revising this based on our more visibility and so on. We wanted to give an indication at least that the pipeline is strong, new technology revenue is growing, and we also wanted to number of accounts, customers, 40 million, 30 million, 20 million customers are growing. To give you one data point, we had in FY17 Q4. We had not a single customer with 40 plus million. This year we have 2 customers 40 plus million. We have multiple customers with 30 plus million. I think only way you can scale up to $1 billion number, provided we have a broad customer base as well as different technology base.
And so sticking to that point, how is the deal pipeline and potential client and the large client pipeline looking like in 19?
I think any particular time we have billion plus order booking today. I think the more than pipeline, we look at the quality of revenue we need to do, and so that we remain in business. So I think looking at the pipeline and looking at what we have been able to do, the customers' requirement, there is a huge ER&D space is increasing. We see more demand coming in multiple areas. And looking at that, we have given the guidance for FY18. Not only that, I gave guidance for FY19. We also said we are, getting ready to hit the $1 billion as well. So I think we have given guidance not only for 1 year. We also said our visibility in FY19, 20, 21 is reasonably good. We should be able to come close to that.
Your margins, however, for FY18 came down to around 15.5% compared to 18%. What is your guidance for FY19?
We did, there are a few things happened though. The Q4, we made an improvement from Q3, 16.1 we got in Q4. And when you do a large deal project, I think initially there is a transition phase it goes through. We need to have people more on site and coming back, and it takes time to do that. And that has brought down, there's no other changes there. Operationally, I think that is what we are working on right now. Only thing I can tell you today that, quarter on quarter, few basis points will continue to increase. Our goal is to come back to the level what we were before, and we look at this.
For the Nifty 10,511, so we're just about hovering at that level, but a couple of stocks, say from the oil marketing space. Yeah, go ahead.
No, I was just looking at L&T Tech Go.
It's at the high point of the day.
Yeah.
But a lot of the stocks are losing out as well. A couple of sugar stocks as well as a lot of these oil marketing companies. Vedanta recovered from the day's low, but nonetheless still down 4.6%. But need to wrap up the show. We leave you with some market opinion from Mahesh Patil of Aditya Birla Sun Life AMC. Halftime report once we're back.
Downgrade to earnings is very, very marginal, I would say. Bulk of the adjustment is over. In fact, a lot of the funds would have started much earlier. In fact, we did the adjustment a couple of months back. And I don't think the impact of this thing is that large. Okay, what the stock prices correction, what we have seen in the mid-cap in the last 6 months or so. I think it's primarily because of, I think, the mid-caps valuations had gone up. There was easy money which was coming in the earlier part of the year. Okay, so that was fueling a rally, and as we saw the money flow starting to slow down, we've seen some moderation back into the mid-cap space. So I think it less to do with the SEBI reclassification. It is more of a correction because of the high valuations and some broader moderation of flows. And overall, the sentiment in the market has also been a bit negative in the last 3 months.